Sticking with the media giant as Disney's turnaround efforts take shape and eyes profitability with its combined streaming business, our next guest is feeling optimistic in the path forward for the company. Joining us to discuss is Robert Schein, Blanke Schein Wealth Management Chief Investment Officer and also a shareholder of Disney. So Robert, let's start there. Disney reports investors clearly disappointed, Robert, but you're a shareholder. So let's start with your response and reaction to the report, Robert.
Yeah, we believe if you look at market action today on Disney stock, it's overreact. So what that does is present an opportunity. If you're a long-term shareholder for Disney, you can average in year to date. We're still up significantly, especially since October lows. But moving forward, the quarter was solid ultimately, and that's what we're looking for. So we know that management is focused both on the top and bottom line. Narrow miss on the top line, bottom line, they made it. But moving forward, I think the biggest disappointment why the movement is down today is sort of the guidance wasn't what Wall Street was anticipating or looking for. So that was disappointing in the future guide.
And Robert, I'm curious to get your opinion on this because you voted for Nelson Peltz in that proxy fight battle that didn't come to fruition. Disney was able to successfully fend off Peltz. Does this earnings report give you the confidence that the current board has things handled, or because of the fact that we have that softer guidance and there seems to be some overhanging headwinds here, do you think that this board needs another person like Peltz? And do you anticipate more proxy battles and fights in the future?
At the same time, I do believe that last quarter's drama is behind sort of the Disney management team, but it's not out of the picture, right? It's that sort of villain that could potentially re-present itself, but not a villain in a bad way, in a great way, especially if you're a Disney shareholder. By that, I mean, you have management's focus on basically profitability. They're basically shareholder friendly right now. They're focused on quality sort of family content moving forward and executing on that. If you look at the entertainment pipeline for the back end of this year, it's solid, 2025 and 2026, all the sequels and all of the great new content, as well as the investment into the theme parks, over $60 billion. And don't forget, last quarter, they also announced 50% boost to their dividend, $3 billion buyback. So I wouldn't be surprised if they're out there doing that today. Obviously, the direct to consumer is the story where that became profitable, as well as in terms of the streaming. I think the streaming, as we've seen others in that world, has scalability. So again, Disney is in a category of one. There's really no competition if you look at what their library is, and they have a $1 billion after $1 billion opportunity just to execute. They just have to keep focused on the financials, and they've already announced, $7 billion. They're on track to keep that $7 billion sort of cost-cutting initiative across the board. So by that, as long as they're focused on being shareholder friendly and minding sort of the highest and best uses of capital, but yeah, we have confidence moving forward.
Robert, so Disney's CFO, Hugh Johnston, was on Yahoo Finance this morning. He talked about that bruising proxy fight. Let's take a listen.
It was a bit of a distraction for a couple of members of the senior team. That said, look, the management team under Bob is focused on creating value for all the shareholders, not just one or two of the ones that tend to be a little bit more talkative. And as long as we keep our eye on delivering value for all the shareholders, I think we'll be in a terrific spot going forward.
All right, so there's Hugh Johnston calling it a bit of a distraction there, Robert. I am curious, though, as a shareholder, why you wanted Nelson Peltz on that board, Robert? Why you voted him? What were you kind of hoping he would bring? What levers did you think he was going to pull?
Either way, it was a win-win, right? He basically got management's attention. Whether he was physically in the room moving forward, he's mentally in the room moving forward. And really, again, they're in a category of one as it relates to what Disney has as a product and a service and an entertainment business. And then their wonderful storytelling, sort of, lifetime generational. They just have the ability to capture that moving forward. And I think they were just going in too many different directions. And now that they can focus on a sort of a keen focus on a great way, it doesn't mean that Nelson Peltz is not sort of in the wings. But, from, below $100, I always thought, Disney below 100 is a generational buy. Now you got that magic of opportunity being down 10% today. Moving forward, I believe wholeheartedly management's going to execute, and you're going to see, it's down 50% from its 52-week high. So there's a lot of shareholder value still to be realized. Management is not out of the woods. They still have a lot of work to do, And again, they're going to get called down to the principal's office, whether it's Nelson Peltz today or somebody else, in the shareholder world tomorrow, that basically believes that they could do a lot better. And the reality is they can, and that's why there's tremendous value. Both, it doesn't matter who you're voting for. Moving forward, there's value to be had.
So you would consider this stock decline today, we're set to close down nearly 10%, as a buying opportunity? Would you say that, and why?
Yeah, again, direct-to-consumer streaming was a very positive, unexpectedly, so that was better than expected. The cost cutting is still taking an effect, so that's helping all the numbers. The uncertainty component, and that's the one thing that we all have to see if it's just a story outside of Disney moving forward, is the consumer, right? They basically said, hey, listen, that's where everyone got spooked right now and say, oh, wait, consumer discretionary. Is it a kitchen table economic, personal to what's happening out there because the economy is so tough, inflation, so on and so forth. So does that become a bigger issue, i.e. impacting Disney's theme park, which is their biggest revenue source? So that is the concern that sort of Wall Street's looking towards right now. And then the CFO this morning basically said, hey, listen, I'm going to give you conservative guidance. Conservative guidance from a management team is always positive moving forward because they always want to manage expectations low and set the bar low so they have success moving forward. So.
All right, our thanks to Robert and Allie both for joining us today. Great chat. Thank you both.